Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening, ladies and gentlemen, and welcome to the Smartkarma Weekly Forum. For those of you who are joining us for the first time, the forum is a high-impact weekly live webinar exclusive for Smartkarma Plus subscribers. We use this opportunity to discuss the best, highest conviction insights surface across the Smartkarma network. The forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. At the end of every week, we take video recordings of the forum and compress them into small 5-minute bite-sized viewing videos. These are then uploaded onto our YouTube channel, which makes it convenient for you to consume them at your own time and pace, as well as review old recordings and share them with friends. Every week, we discuss small and mid-cap ideas, large caps, as well as core thematics. This week, we will begin by looking at Perfect Medical, which is a great reopening play for Hong Kong. We will then move our attention to China Dongxiang, which is a deeply discounted value play. And finally, we will revisit Oriental Watch, which is a name that has been featured several times before on the Smartkarma forum. Let's kick things off with Perfect Medical. The ticker is 1830 Hong Kong. The market cap is just over $700 million US, and this is a stock that has done reasonably all right, roughly back to its 52-week high levels, as you can see from this chart. First things first, Perfect Medical offers slimming and beauty treatments, including fat softening, laser freckle services. We call this category medical aesthetics. It operates mostly in Hong Kong, but also has a small part of its operations in China. This makes it a perfectly poised play for Hong Kong's reopening and recovery. Samir notes that this is trading on about 11.8 times FY23 earnings, along with a very attractive dividend yield of 8.5%. What's more interesting, perhaps, is that net cash is more than 10% of market cap, which means the company could look to do further M&A as the market reopens. The chairman's buying of shares and the company's repurchases well caught Samir's eyes. In terms of risk, the only risk that Samir sees at the moment is a potential falling back to a zero COVID policy, as well as faulty M&A execution and potentially labor issues. Let's move on to China Dongxiang. The ticker is 3818 Hong Kong. This is covered by Oscar Tang on the platform. The market cap is just under $300 million US. China Dongxiang's principal business is retailing sportswear apparel. In addition, China Dongxiang also has a very significant investment portfolio where it owns shares in several of the Alibaba Group companies, as well as other funds and private equity assets. We noticed that the investment portfolio value might have increased by over 2 billion Hong Kong dollars since end of September. Meanwhile, Dongxiang's own market cap has risen by only 500 million. This means there is an almost 80% discount between its own market cap and the value of the asset it owns. Going forward, Dongxiang remains a privatization candidate, a deep value candidate, and is also returning capital to shareholders through dividends. Finally, we will revisit an old favorite idea, which is Oriental Watch. For those of you who are catching up to this for the first time, Oriental Watch trades and sells watches across retail stores in Hong Kong and China. It pays a very, very attractive dividend yield. It went ex-dividend on the 30th of December. The stock corrected only slightly and is trading at about 7 times PE and about a 15% dividend yield. There still remains a substantial margin of safety with assets worth 4 Hong Kong dollars or more per share. Trends point to a year of decent profitability as same-store sales growth continues to remain stable in China. On a year-on-year basis, though, Samir notes that earnings will be pale. But for those who want to own it for a long time, you should expect to receive a very handsome dividend given the yield is as high as 15%. In case you have further follow-up questions or want to revisit some of the old ideas, kindly head on over to the Smartkarma platform where you can continue the conversation with our insight providers. Thanks very much and hope to speak to you next week. Cheers. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.